So, hello everyone. In this video, we're going to talk about effective candles and how you can use them to determine where price should go and to use logical sense. So, you're going to see a lot of effective candles appear. Effective candles are thick volume driven candles. So, you have four different type of candles. You have the green one, red one, blue, and pink. Red and green are going to be both 200% increase in thick volume, and the pink and blue are going to be 150% increase in tick volume. So pretty much what tick volume is how much price has changed in this certain amount of time. So on a 4 hour candle, the price on the red candle changed 200% more time than the previous 10 candles. It's like all the effective counts are calculated from the previous 200 candles. 10 candles, excuse me. So when you have a lot of increasement in volume, what that means is, for example, this candle right here, we have bearish tick volume. This means that we had a lot of sells in this area. The thing is, like I have talked about in previous lessons, I I told you guys, for every buyer there has to be a sell. For every seller there has to be a buyer. So in this sell right here, where we had a lot of increasement in sells, Mr. Market Maker was buying everything up right here. He has um, absorbed the cells and fulfill this obligation to provide liquidity, and does so going against the retail traders. This is how the market works in its fundamental basis, and this is how it's always going to work. If you don't have this, you're going to have something called illiquid market, and you're going to have something that is trading like a shitcoin, where every time you enter in with $10, you see price enter up or down in a really fast motion. So when you have these spectre candles set up, basically, um, you're gonna see the reds, most of the time appear at lows, and then greens most of the time at highs. So if I mean high and lows, I mean above and below the 50 EMA. So below the 50 EMA, if you see green candles appear and like a lot of reds appear at the lows, that might be a reversal. So right here, you see this market maker was building up his longs, his longs, his longs. He was building up his longs right here. You see more at the lows right here, and then you see price reverses back up. Easy, okay? Right here, more reds, price reverses. Right here, green, price reverses. Price reverses. Here, price reverses. 800 EMA, increasing buys, come back. What's it called? So the pink 50 candles and blue 50 candles are going to be both inducement candles. They're going to be high enough to be recognized by us traders, but they're not going to be high enough to be actual market manipulation. Okay, so these are more manipulative candles because they're really strong, and they have a really increasement in pick volume that you can really see. You know, blue and pink faded candles are going to be less noticeable and don't always have a meaning because of how small it is. But in a lot of times, they will have meaning. A lot of meaning behind them, because you will see, for example, it will be used as form of support resistance, or you will see them appear at highs and lows because trap traders are stuck there. Okay, so on our way to, for example, or your high or your low, you want to see an increase in volume, in tick volume activity. So you want to see a lot of vector candles appear, and then you want to see a blue vector candle, and then that might trigger your W formation or some sort of reaction to the upside, for example. So right here, you had a downwards movement. You see a lot of vector candles appear. Blue vector candle right here. Blue vector candle top right here. Pin bar, stopping volume candle, back to the downside, and all the fun happens. So pin bars and stopping volume candles are all dojis. They're gonna be like doji candles, hammer candles, and morning star, all those type of reversal candles where you see a lot big wick but small body. Okay, so for every effective candle that you have, let's say this is your effective candle right here. For every effective candle you're gonna have is your top of your body, and so let's say this is the top. Let's say this is the bottom. For every time you have effective candle created, every time price comes into the effective candle, and then let's say reverses back up, what happens? The imbalance gets smaller, and and does so, actually telling you that they already cleared this amount of liquidity. Let's say in this little box right here, there was $50 in this. Let's just say, um, yeah, let's just wait. You can think of it this way, right? You have a bucket of water, right? What happens is you have like a glass, okay? You scoop in to the bucket, you grab some of the bucket, grab some water out of the bucket, and then leave with your glass full, okay? So what happens? The bucket becomes smaller. Um, Not the bucket itself, but like the content inside of the bucket, because you just scooped out a little bit of it. So this is the same logic gonna apply to effective candles. So every effective candle you have, you're gonna draw a box, the box right here, and as you can see, every time effective candle or a normal candle comes to it and wicks through it, this zone right here. For example, this is now the zone that we have to recover. On the right side, we already recovered it, so that's good. Um, yeah, so like I said, right here, this should be your box right here. And the reason why I did not draw it right here is because you already tapped. Okay, you already cleared the zone, clear the zone, clear the zone, tap this, and then on the right side you fully cleared the zone using this. Most of the time you're gonna see alignments, and you're gonna see things align. So what I mean by aligning is you're gonna see red reflected candles pair, and on the right side of it is gonna be green. Okay, and for green it's gonna be red like this. You know, it doesn't always appear, but you're gonna see a lot happening. When you see something like this could be this can be induction, inducement, whatever you want to call it. Okay. You're gonna also gonna see this little pattern here at the top. So you're gonna see green, red, and this logic applies that we have stop hunts. Okay, so let's get a clear image of this, and let's give you some backstory. What happened right here? We have an increasement in buys. So this tells me we had a lot of buys in this area. Okay. What you also could do is you can mark out this way right here, this body to body right here, mark out like this, and I think it's going to be used as a point of resistance for future purposes. As you can see, it worked out right here. We had a beautiful bounce right here, clearing this pink vector candle liquidity right here, almost to the tip precision right here. Then we come back down and we try again, retest this high, clear this high real quick, and then we drop again. Okay. This the reason why this was invalidated is because it was Saturday, Sunday, so markets were dead right here, and when it was Monday, it was dead volume still. So that's why you don't want to trade Mondays, especially when you're on the cloud stuck. Okay, so yeah, that's besides the point for now. So right here you have an increasement in buys, so you know your stops are going to be set in this location right here. The reason for this is because we know that every time you go in long position, your stop is going to be placed below. The higher leverage you use, the closer stop is to your entry, because you're going to lose more percentage faster. Okay, so right here, stops are going to be really close to this, and all in this little effective zone right here. As you can see, price does retap it after a while, but yeah. So right here in this drop right here, we grabbed some induced shorts right here. I'm pretty sure if we go and jump in the lower time frames, I'm not gonna do that right now because I'm gonna lose this picture. But I'm pretty sure you're gonna have this. You're gonna have something like this in the zone, and if not, then it was just a stop hunt. It was just grabbing some sort of liquidity. Oh, yeah, right here. Yeah, liquidity to grab right here. So that could also be the logic. It's a lot of logic. Yeah, so again, here, head and shoulders pattern, here at the tops, if I can grab it. So right here, your beautiful head and shoulders pattern, one of my favorite patterns to play. It's a form of the W formation right here. And what I'd like to do with these patterns is I'd like to look at the highs and bottoms of it and see what type of effective candles I see there. So in this high right here, in this first, this head right here, you're gonna see blue effective candle, pin, 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 pin. All these pins and doji candles are telling me the price does not like this area, and we might as well go down and click the liquidity that's sitting on the left side. Okay, so this retrace right here is a bit scary because I might have been stopped down right here at break even, or take some partials in this 50 MA right here. To be really honest here, But if I like would have entered this trade and like I held it, then that would be really good profits because I would have taken profit right here and then run it down to this low right here, this low zone right here. I guess it wouldn't be hit as well. Oh well. Still profit is profit, man. What's the profit on this one? Just pure out of curiosity. Almost 10%. 10% is nice. But yeah, so you had a Schultz pattern. You see, you have increasement in bias right here. Like I said, increasement in bias. What does it mean? Stops are being set below in this zone. Gonna use this logic right here, this liquidity right here as the logic. Okay, really, really simple. Really, keeping this to the basics, guys. Okay, come on. So right here, you're looking left side again. See, longs, stops below, you see, grab the stops. Right here, stops above, you see, grab the stops. Okay, didn't fully grab the stops, now we grab the stops. Okay, this couldn't be buy stops right here, to be really honest. Yeah, that's what I think it was at that point. Right here below, we see more buy stops or buy orders getting triggered right here, price going up, and more sellers. You're gonna have these zones where we're gonna see like almost none market maker activity and all gonna be retail buying up and selling up. So that's gonna be really fun areas to build up because you already know that price is gonna do some sort of reaction of that zone because we have a lot of liquidity in that zone, a lot of interest in that zone. So that's something to keep in mind and to backtest and see what happens in that zone. Okay, there you go, man. Okay, so yeah, that's your little lesson, man. So this lesson was really fast. I tried to talk as fast as possible because we're gonna have a lot of information. Also, the way we react on the 50 AMA is really important. Let's say stronger moves of the 50 AMA can tell us that we have stronger confidence to break the what's called to break the zone. Three hits to the high are also one of our ways to tell a thing has been ended. A trend has ended, but that's using market maker pattern, so we're not that far yet. This is just the basics. I wish you guys all good luck, and wish you guys a happy day.